Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Yes, we are starting our valuation for what Tesla will be worth by the end of the year. This is a model based on what Elon has told us and what we've heard from credible insider sources. These are not necessarily my predictions, but going from all the massive amount of information we were just handed from the Q2 earnings call and shareholders meeting. So I'm creating production estimates based on my inference of all the numbers we were told then. From there, I will do my best to then calculate how much revenue and profit that might generate. So to be clear, this is an end of the year valuation for Tesla. It is not dependent on Q4 results. It is not a stock price prediction. It is the best job I can do to assign the most accurate value I feel for the company. We're essentially creating an imaginary quarter if every day was as good as the end of Q4. From there, we can use that figure and relate it to the current stock price, which may aid us in our investing, trading, conviction, and confidence in holding our Tesla stock. But the market assigns its own value in Tesla, which is not so rational. So let's begin. We'll start by estimating the production from each factory. We'll do all our numbers in a quarterly fashion like we always do, and it will serve as a great way to compare other quarters, but it will be based on the run rate obtained by the end of the year. Let's start with Fremont. Not that they play as much an important part for the company anymore, but the Model S and X should be up to at least 20,000 units in Q4, so perhaps 22,000 by the end of the quarter? A lot of people have been telling me they finally got their X, some earlier than expected, so perhaps that's a good sign. Anyway, it won't have a huge impact if we're off by 1,000 or 2. There aren't too many reasons as to expect any major jumps in Fremont from 3 or Y production, so I'm just going to add about 1,000 onto each of those for good measure, compared to where we were seeing last quarter, giving us a total quarterly run rate from Fremont of 141,000 vehicles, up from around 135,000 in Q2. And also, given we're still expecting 10,000 units growth from S and X, I feel this is not too far a stretch. Alright, let's do the fun one next. Shanghai. Lots of hope here coming from these amazing line upgrades. According to insiders, the Shanghai Model Y line is meant to hit 2,200 vehicles a day in August, up from 2,000 a day in July, just after the line upgrade. After August, there are still 4 more months from this forecast we're predicting. Is it not possible that the line could improve on speed even further over that period? Well, I'm sure it is, but let's just stick with 2,200 as I think that will please us enough. And let's give our imaginary quarter 91 days, which comes to a total of 200,000 Model Ys from Shanghai alone, not far off the total produced from all factories in Q2. Then we have the less discussed Model 3 Shanghai line upgrade, which started on the 17th of August, once the Model Y upgrade was completed. The Model 3 upgrade was expected to be completed on the 7th of August. Now, if the Model Y upgrade started in July and was completed on the 16th of July, that would mean the line upgrade took a maximum of 16 days. If the Model 3 upgrade started on the 17th of July and took until the 7th of August, then that is 21 days. The Model 3 upgrade took at least 5 days longer to upgrade than the Y. That is potentially quite a large upgrade. The Model 3 line was previously achieving 1,000 to 1,200 a day with 3 shifts. After this upgrade, they're expecting 500 to 600 per shift, or 1,500 to 1,800 vehicles per day. That's a big jump. I think there are some long overdue line upgrades on the Model 3 that perhaps were not worth doing before due to the insufficient cell supply and the Model Y taking priority due to it being more profitable. But I think now with CATL's growth in cell production, that Tesla are now upgrading both lines in order to be able to accept the additional cells. I guess even the almighty Model Y Shanghai line has its limits too, so the overall spill will be transferred to the Model 3 line. Anyway, 500 a shift equates to 1,500 a day, which would be 136,000 Model 3s in a quarter, which I think is good enough. Wow, these numbers are getting big. Imagine what it's going to be like when we deal with production numbers about 3 times this size. This gives us a total run rate for Shanghai of 336,000 a quarter. As for Berlin and Texas, well, Elon has said that he still expects them to hit volume production, which is 5,000 units a week, by the end of the year. In our imaginary quarter, we have 91 days, which happens to be exactly 13 weeks. Well, that would mean a total of 65,000 units a quarter run rate each, which comes to 130,000 total for both factories. Wow, that's coming up quick. 130,000 additional vehicles delivered. That's huge. What an addition these factories will be on top of what we already have. And this is still the start. These factories have a long way to go still, expected to hit 500,000 units a year run rate by the end of next year. Oh, and Texas even has a whole other model still to be added to this factory. Yeah, let's not forget that the most pre-ordered vehicle in history is still yet to start production in that factory. Now, with people starting to think it may begin production earlier next year, and possibly even hit volume production mid next year, I think that it will end up coming down to the 4680 cell production, and Tesla can't quite guarantee that that will hit high volume production by then. I think Tesla are starting to get the Cybertruck line ready, perhaps in case they do have a breakthrough on the 4680 lines. When we put all those numbers in there, then we get just over 600,000 vehicles produced. Just to remind you again, this is not my Q4 prediction. This is the run rate at the start of Q1 2023. But bear in mind, this is only subject to Tesla having enough 4680 cells to continue that rate. There may also be some downtime when the new factories are transitioning from 2170 batteries to 4680 batteries. I know this is likely a lot higher than possibly all other estimates, but what do you want me to change? I've done what Elon has said. On the Q2 earnings call, he said, and so that's why I'm confident we'll get to 5,000 cars a week at Austin and Berlin by the end of this year or early next year. We have been told, though, that Berlin alone should be 3,000 a week by October. We would assume if that was the case, then Austin shouldn't be too far behind. If both factories were still at a 3,000 a week run rate at the end of the year, then that would be 26,000 fewer vehicles per factory per quarter. We could play with some numbers perhaps when we do the financials and see what difference that actually makes. However, in the meantime, we can also relate back to the other piece of information we have, in that Tesla could also still reach 1.5 million units for the year. With 564,000 vehicles produced in the first half, it leaves 936,000 for Q3 and Q4. I'll do some numbers on those later, but given that the ramping for the new factories appears to be happening in Q4, and with Shanghai losing half of July in Q3, for the 1.5 million units to be reached, it has to be carried mainly by Q4. Q4 would have to be around 550,000 if that was the case. And if the total of Q4 is 550,000 for the overall quarter, then by the end of the quarter, 600,000 run rate probably does fit. So let's stick with that and see what it comes to at least. We can play around with it a bit later. Remember, we're also not factoring in any more improvements in Shanghai from August all the way to December, which there likely could be. This valuation will be real at the end of the year, but it may not be sustainable. There is a chance Q1 could see a drop in production. This is entirely down to the 4680 ramp, which is an S-curve, except we don't quite know where on the S-curve we are. So it is possible that Tesla may not be able to obtain this run rate again until perhaps in Q2. I doubt the market will know the difference either way. If we do have a slump in Q1, then I would imagine the stop price to first run with the Q4 results, and then drop if we discover 4680 issues still remaining. Then to recover when 4680s finally can carry the Model Ys through to volume production. These could just create more buying opportunities, as even Elon says. Although on top of that, according to Elon, it is likely that FSD will also be complete this year, but what effect will that have on the stock is hard to tell, to be honest. I think Elon has lost credibility with the market as to what that actually means now. I mean, it's a huge deal for us, but will the market even care anymore is another question. Alright, and there we have it, our production run rate for the end of the year that we were after. The next task is to try and calculate the revenue and profit it will produce, and see what sort of value we might place on that. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.